Question 1. Principles of insurance. Which of the following scenarios is an example of proximate cause in an insurance claim? A. A fire damages a house and the water used by firefighters causes further damage to the property. B. A homeowner fails to maintain their roof, leading to gradual water leakage that damages the ceiling. C. A vehicle accident results in the insured filing a claim for emotional distress without any physical damage. D. A policyholder intentionally sets their own property on fire and files a claim for the damage. Answer A. Explanation. Proximate cause refers to the direct and uninterrupted cause that leads to an insured loss. In option A, the fire is the proximate cause and the subsequent water damage from firefighting efforts is directly related to the initial cause. B is incorrect because gradual damage due to lack of maintenance is not covered by most insurance policies. C is incorrect because emotional distress is generally not considered approximate without physical damage. D is incorrect because intentional acts by the insured are not covered and constitute insurance fraud. Relevant rule. Proximate cause is a key principle in determining liability and claims payout. The insurer covers damages that are reasonably foreseeable from the initial insured peril. Question 2. Scenario-based question. Health insurance. Mrs. Thompson has long-term care insurance policy with 90-day elimination period and daily benefit of $200. She recently became eligible for long-term care services and has been receiving care for the past 120 days. She now files claim with her insurance company. How much will Mrs. Thompson receive from her insurance company based on her policy terms? A. $6,000. B. $18,000. C. $24,000. D. $30,000. Answer B. Explanation. The elimination period is a waiting period during which no benefits are paid. In this case, Mrs. Thompson must wait 90 days before receiving any payment. After the elimination period, she will receive a daily benefit of $200. She has been receiving care for 120 days. The insurer will pay for 30 days of care, 120 days, 90-day elimination period. Calculation. 30 days x $200 equals $6,000. Thus, B. $6,000 is the correct payout. Relevant rule. The elimination period is the time that must pass after went before the insurer pays benefits. Long-term care policies typically have such waiting period to reduce short-term claims. Question 3. Underwriting and risk assessment. Which of the following statements is true regarding the use of credit scores in the underwriting process? A. Credit scores can be used to determine whether a customer qualifies for any type of insurance policy. B. Credit scores cannot be considered in underwriting because they are not related to risk assessment. C. Credit scores are primarily used for determining the premium rates for personal auto and homeowners policies. D. Credit scores are only used to deny insurance coverage to high-risk individuals. Answer C. Explanation. Credit scores are used as a predictive tool in underwriting to assess the likelihood of a policyholder filing claims. Insurers commonly use credit-based insurance scores for auto and homeowners insurance to help set premium rates. It is incorrect because not all types of insurance policies rely on credit scores. B is incorrect because credit scores are directly related to financial behavior and can indicate risk. Is incorrect because credit scores are not solely used to deny coverage. They are used to determine pricing and risk tiers. Relevant guidelines. Under the Fair Credit Reporting Act of CRA, insurers must notify applicants if credit scores are used in underwriting decisions. Additionally, Hawaii imposes specific restrictions on the use of credit scores to ensure fairness in the underwriting process. Question 4. Property and casualty insurance. Which of the following best describes the difference between replacement cost and actual cash value SCV in a homeowner's insurance policy? A. Replacement cost accounts for depreciation while SCV does not. B. Replacement cost is always lower than SCV because it covers the item's original purchase price. C. SCV covers the cost to repair or replace an item, while replacement cost provides payment for market value at the time of loss. D. Replacement cost provides the amount to replace an item with new one of similar type and quality, while SCV deducts depreciation from the payout. Answer D. Explanation. Replacement cost provides the amount needed to replace the damaged property with a new item of similar type and quality without deducting for depreciation. Actual cash value SCV, on the other hand, takes into account the depreciation of the item at the time of loss is incorrect because replacement cost does not account for depreciation. B is incorrect because replacement cost is typically higher than SCV. ACV actors in depreciation. C is incorrect because it reverses the definitions of SCV and replacement cost. Relevant rule. Most policies allow policyholders to choose between cost and SCV when purchasing coverage. Hawaii law requires insurers to clearly explain these options. Question 5. Property insurance. Which of the following is typically considered? Actual cash value, SCV, in property insurance. A. The cost to replace damaged property with new materials of like kind and quality. B. The cost to repair the damaged property without depreciation. C. The market value of the property at the time of the loss factoring in depreciation. D. The amount the policyholder pays out of pocket before insurance coverage kicks in. Answer. C. Explanation. Actual cash value, SEV, is the market value of the property at the time of the loss minus depreciation. It represents the cost of replacing the property, accounting for wear and tear rather than replacing it with new materials, which would be covered under replacement cost. Question 6. Life insurance. Which of the following best describes a universal life insurance policy? A. It provides a guaranteed death benefit with fixed premium payments for the life of the policy. B. It offers flexible premiums and death benefits, and the cash value earns interest based on market performance. C. It provides coverage for a specific period of time and does not build cash value. D. It is a policy that combines life insurance with an investment component tied to the stock market. Answer. B. Explanation. Universal life insurance is a flexible premium policy that allows the policyholder to adjust both the premium payments and death benefit. The cash value accumulates based on interest rates set by the insurer or tied to a financial index. It is incorrect because that describes whole life insurance. C is incorrect because that describes term life insurance. D is incorrect because that describes variable life insurance. Relevant rule. Universal life insurance is regulated under Hawaii Revised Statutes Chapter 431, which governs life insurance contracts. Question 7. Medical expense insurance. In a health insurance policy, what is the purpose of a stop-loss provision? A. It limits the maximum amount the insurer will pay for a claim. B. It sets a cap on the total amount a policyholder must pay out of pocket in a policy year. C. It determines the maximum benefit period for long-term care coverage. D. It excludes coverage for pre-existing conditions after a specific time period. Answer. B. Explanation. The stop-loss provision is a cap on the total out-of-pocket expenses a policyholder must pay in a policy year. Once the insured reaches this limit, the insurer covers 100% of remaining covered expenses. A is incorrect because it refers to policy limits, not stop-loss provisions. C is incorrect because stop-loss provisions do not affect benefit periods. D is incorrect because pre-existing condition clauses separate from stop-loss provisions. Relevant rule. Under the Affordable Care Act, a cap health insurance policies must include out-of-pocket maximums to protect consumers. Question 8. Workers' compensation insurance. Which of the following injuries would not be covered under a standard workers' compensation insurance policy in Hawaii? A. An employee slips on a wet floor at work and fractures their arm. B. An employee develops carpal tunnel syndrome due to repetitive motions required by their job. C. An employee is injured during a company-sponsored retreat off-site. D. An employee is injured while commuting to work in their personal vehicle. Answer. D. Explanation. Workers' compensation insurance covers work-related injuries and illnesses. However, injuries sustained while commuting to or from work are generally excluded under the going and coming rule unless there are exceptions such as employer-provided transportation. A. B and C describe injuries that occur within the scope of employment and are covered by workers' compensation. D is not covered because commuting is considered personal activity. Relevant rule. Hawaii workers' compensation laws are governed by Chapter 386 of the Hawaii Revised Statutes. Question 9. Policy delivery and premiums. When does insurance coverage officially begin for a life insurance policy if a conditional receipt was provided upon the initial premium payment? A. On the date the insurer receives the completed application. B. On the date the policy is physically delivered to the policyholder. C. on the date of the application or medical exam, whichever is later, provided the applicant is insurable. D. On the date the policyholder signs a statement of good health. Answer C. Explanation. A conditional receipt is provided when the initial premium is paid with the application. Coverage begins on the date of the application or medical exam, whichever is later, but only if the applicant is found to be insurable according to the insurer's underwriting standards. Is incorrect because coverage does not begin upon receipt of the application alone. B is incorrect because physical policy delivery is not required for conditional coverage. D is incorrect because statement of good health is required only when coverage has already been approved. Relevant rule. The conditional receipt provides temporary coverage during the underwriting process, protecting applicants from unforeseen events during this period. Question 10. Property insurance. Which of the following is not typically covered under a standard homeowner's policy? A. Fire damage to the structure. B. Theft of personal property. C. Flood damage to the property. D. Vandalism to the exterior. Answer C. Explanation. A standard homeowner's insurance policy generally excludes coverage for flood damage. Flood coverage is typically purchased separately as a flood insurance policy. Question 11. Auto insurance. Which of the following is not considered a first-party coverage in an auto insurance policy? A. Collision coverage. B. Comprehensive coverage. C. Uninsured motorist coverage. D. Bodily injury liability coverage. Answer D. Explanation. Bodily injury liability coverage is third-party coverage because it protects other individuals if the policyholder is at fault in an accident. The other options are first-party coverages, meaning they cover the policyholder directly. Question 12. Homeowners insurance. Which of the following is the best description of a dwelling policy? D1 in homeowners insurance. A. It covers all types of property damage, including accidental water damage. B. It provides basic fire and lightning coverage with additional endorsements available. C. It covers comprehensive perils, including theft and vandalism. D. It provides a higher level of coverage than the standard HO3 policy. Answer B. Explanation. A dwelling policy D1 is a basic policy offering named perils coverage, including fire, lightning, and vandalism, but does not include water damage or comprehensive coverage without additional endorsements. Question 13. Commercial insurance. A business owner's policy BOP is designed for small businesses. Which of the following is not typically included in a standard BOP? A. Property coverage. B. Business interruption insurance. C. Liability coverage. D. Auto liability insurance. Answer D. Explanation. Auto liability insurance is generally not included in a BOP. Businesses need a separate commercial auto policy to cover their vehicles. Question 14. Life insurance. Which of the following types of life insurance policies provides coverage for a specified term with no cash value or investment component? A. Whole life insurance. B. Universal life insurance. C. Term life insurance. D. Variable life insurance. Answer C. Explanation. Term life insurance provides a death benefit only for a specified term and does not accumulate cash value. The other options all have some form of cash value or investment component. Question 15. Insurance adjusters. An insurance adjuster is responsible for A. Settling disputes between the insured and the insurer. B. Determining the premium for a new insurance policy. C. Inspecting property damage and determining the amount of the payout. D. Writing policies and determining underwriting guidelines. Answer C. Explanation. An insurance adjuster is responsible for evaluating claims, inspecting property damage, and determining the amount the insurer will pay for a covered loss. Question 16. Workers' compensation. Workers' compensation insurance provides benefits to employees who are injured on the job. Which of the following benefits is typically not covered by workers' compensation? A. Medical expenses related to the injury. B. Wage replacement for time missed from work. C. Benefits for injury sustained during a company-sponsored event. D. Punitive damages for negligence on the part of the employer. Answer D. Explanation. Workers' compensation does not cover punitive damages for employer negligence. It provides medical expenses, wage replacement, and benefits for injuries sustained at work, including at company-sponsored events. Question 17. Casualty insurance. Casualty insurance primarily covers which of the following types of loss? A. Personal property damage. B. Damage caused by fire or weather events. C. Damage or injury caused to third parties. D. Theft of personal property. Answer: C. Explanation: Casualty insurance typically covers liabilities including damage or injury to third parties, such as bodily injury or property damage caused by the insured's actions. Question 18. Insurance underwriting. Which of the following best describes the purpose of underwriting in the insurance process? A. Setting the premium rates for policyholders. B. Investigating claims and determining liability. C. Assessing risk and determining eligibility for coverage. D. Approving claims for payout. Answer: C. Explanation. Underwriting is the process of evaluating the risks associated with insuring a person or property and deciding whether to offer coverage, as well as determining the terms and premium for that coverage. Question 19. Health insurance. Which of the following is not typically considered a preventive health care service under many health insurance plans? A. Routine immunizations. B. Annual physical exams. C. Diagnostic tests for existing health conditions. D. Cancer screenings for individuals at high risk. Answer: C. Explanation. Diagnostic tests are typically used to diagnose existing health conditions, whereas preventive services focus on maintaining good health and preventing illness, such as immunizations, screenings, and exams. Question 20. Property insurance. Which of the following perils is typically not covered under a basic homeowner's insurance policy? A. Fire. B. Lightning. C. Earthquake. D. Theft. Answer: C. Explanation. Earthquake damage is not typically covered under a standard homeowner's insurance policy. It requires a separate earthquake insurance policy. Question 21. General insurance principles. Which of the following is a core principle of insurance? A. Risk assumption. B. Risk retention. C. Risk transfer. D. Risk distribution. Answer: C. Explanation. Insurance involves risk transfer, where the insured transfers the financial risk to the insurer in exchange for premiums. This is a fundamental concept of insurance. Question 22. Homeowners insurance. Which of the following dwelling types is usually excluded from coverage under a standard homeowners policy? A. Single-family homes. B. Multifamily homes. C. Farms. D. Vacation homes. Answer: C. Explanation. Farm properties are typically excluded from standard homeowners policies. Special policies for farms or ranches are required to cover agricultural property and operations. Question 23. General insurance terms. What is moral hazard in insurance? A. The likelihood of natural disasters affecting insured property. B. The tendency of insured individuals to take on higher risks because they know they are covered. C. The risk that an insurer faces due to regulatory changes. D. The increase in premiums due to inflation. Answer: B. Explanation. Moral hazard occurs when individuals take on higher risks because they know they are covered by insurance. It reflects the human tendency to act differently when insured. Question 24. Liability insurance. Which of the following statements about liability insurance is true? A. It provides coverage for damage to the insured's own property. B. It covers injury or damage the insured causes to other people or their property. C. It applies only when the insured is at fault. D. It covers the insured's personal medical expenses. Answer: B. Explanation. Liability insurance protects the insured from legal responsibility for damage or injury caused to others or their property. It does not cover the insured's own property or medical expenses. Question 25. Health insurance. Which of the following is not typically covered by a standard health insurance policy? A. Surgery. B. Preventive care. C. Cosmetic surgery. D. Emergency care. Answer: C. Explanation. Cosmetic surgery is generally not covered by standard health insurance policies unless it is medically necessary due to an injury or illness. Question 26. Policyholder rights. The policyholder has the right to cancel their insurance policy. Which of the following must the insurer provide in the event of cancellation? A. Refund of all premiums paid. B. Prorated refund based on unused premium. C. A cancellation fee. D. Automatic renewal of the policy. Answer B. Explanation. When a policyholder cancels their policy, the insurer is typically required to provide a prorated refund based on the unused premium period. Question 27. Umbrella insurance. What does umbrella insurance provide in terms of coverage? A. It covers basic property and casualty insurance. B. It provides coverage that exceeds the limits of other policies. C. It provides coverage for specific risks like natural disasters. D. It is limited to life insurance policies only. Answer B. Explanation. Umbrella insurance provides additional coverage above and beyond the limits of standard policies like auto and homeowners insurance to protect against large claims. Question 28. Health insurance. What is the primary function of a deductible in a health insurance policy? A. To limit the insurance company's coverage. B. To reduce the amount of the premium. C. To define the out-of-pocket expenses for the insured. D. To determine the coverage level for family members. Answer C. Explanation. A deductible is the amount that the insured must pay out of pocket before the insurance policy starts to cover medical expenses. It helps reduce the insurer's risk. Question 29. Liability insurance. Which of the following would not be covered under a personal liability insurance policy? A. Injury to a guest at a party hosted by the policyholder. B. Property damage caused by the policyholder's negligence. C. Personal injury to the policyholder themselves. D. Legal defense costs for lawsuit related to covered incidents. Answer C. Explanation. Personal liability insurance typically covers injury or damage to others, not the policyholder. It does not cover the policyholder's personal injuries. Question 30. Commercial insurance. Which of the following is the primary purpose of business interruption insurance in a business owner's policy? A. To cover the cost of equipment repairs. B. To provide a safety net for business owners' personal assets. C. To cover lost income if the business cannot operate due to covered loss. D. To cover employee wages during business downtime. Answer C. Explanation. Business interruption insurance covers lost income when a business cannot operate due to a covered loss, helping ensure business continuity.